Good day, my name is Dean Crocker. I'm a senior equity analyst with the PSG Wealth research team, and today I'll be taking you through our latest EIA report completed on Exxaro Resources. So just before we get into the various slides, I'd just like to run through the executive summary. These are the 5 points I'd like to leave with you following this presentation. So this was, just worth noting, the first half results for the full year 21. We see Exxaro as a Sishen Iron Ore play, which currently contributes roughly 73% earnings, but only about 20% of the asset base. There is, however, that nice strong underpin of the coal exposure, which is actually what Exxaro is known for. However, the period and going forward, the group is to continue to remain hindered by the performance of Transnet. This is a massive concern for us and as well as the company, in the sense that it really hindered their current results. They also mentioned the fact that going forward it is going to impact them, which means they become more predominantly a local supplier, which eliminates them largely from the external or the export market, which has seen quite strong competition, particularly from the likes of Australia. We have seen strong pricing support for coal. This is largely due to the ESG requirements of the carbon neutral requirements of the world at the moment, and it has seen that coal prices ran tremendously hard, touching $230 per tonne, currently trading around about $220. In terms of Sishen Iron Ore, this was the underlying performer of this period. Really, you'll see in the next slide that its results dwarfed that of the underlying coal operations and really underpinned this group going forward. Now, the group has, based on the back of Sishen Iron Ore's profits of 6.3 billion, proposed a pass-through of the full dividend to the underlying Exxaro shareholders, which really is on top of and beyond the R20.77 dividend already declared. Based on all the analysis, we have reached an intrinsic value of R179. This implies an 8% upside. We did complete a sum of the parts in which we did analysis of the underlying coal operations and separately valued the investment in associates. So just looking at the event, this was the first half results for full year 21. Total sales volumes were down 11%. However, revenue was up 7.6%. And this was really on the back of the stronger coal prices, which really ran hard. Core EBITDA followed suit, up 10%, resulting in earnings of 4.3 billion on an EBITDA basis. As you can see from an associate income basis, that was up 37%. And their earnings were 6.4 billion. That's dwarfing that of the coal operations of 4.3 billion. The group did see weaker operating cash flows, largely due to a weaker underlying cash performance of the underlying operations. However, there was a strong dividend, and they declared a 223% increase in their dividend. Further, they declared a 1.5 billion rand share repurchase program implemented in the second half of 2021. Looking at the impact, so on the data release, the market reacted negatively. The share closed 1.37% lower. However, since the beginning of the year, Exxaro has outperformed the JSE by 25.2%. And just taking note of that table, you can actually see they have been a standout performer over the last 5 years, really only showing some weakness in the last month. So in terms of the assessment, Exxaro is a really nice company. It's got great exposure to the coal industry. They have benefited largely from the fact that they have these investments in associates, particularly Sishen Iron Ore, and on the back of the stronger iron ore prices really underpinned the results in this period. They are trading at a discount to the 5-year average, implying value right now. We have also seen that they have a strong free cash flow yield of roughly 41%, but it's worth noting that that's stronger relative to the other peers just due to that income and investment in associate. The balance sheet has seen some strengthening. Net debt is down 32%, and the cash ton cost is also up only about 4.2%. Relative to inflation, which is hovering around about the 5.5% mark. That cash ton up to 421 Rand. It is worth noting that's on unchanged strip-in ratio. Then lastly, the group did report strong concentration grades for the export market, very strong RB1 coal grade. The problem they had was they weren't able to service that demand, global demand, due to the inefficiencies of Transnet. And this is really a growing theme and something that's going to hinder this company and other export companies in the near future, until such time as Transnet actually starts to pull their weight a little bit and improves the infrastructure. In terms of the coal prices, so there was strong support in the medium term, or in the short term, with it running to $231. It's now sitting at $220, as I mentioned. We do expect it to decline on a forward basis to 159 and 92 on a 4-year, 2-year basis. That's more or less in line with management expectation of a longer term pricing of roughly about $78 per tonne. This is just a nice graph to demonstrate the sales and product mix of Exxaro. You can see that their predominant partner is Eskom. Now there is some exposure to Eskom, which implies that if Eskom isn't able to continue paying, there's some risk associated with that. Nonetheless, they are probably the strongest and largest local factor in supply to Eskom. That's remained very important to local economy. You can see that the export market, there is some expectation in the forward earnings to try and improve and grow that. However, that is just a bit of a concern for us given that the performance of Transnet was so dismal. So just looking at the sum of the parts valuation, you'll see that it's comprised of 2 sections. The first section being the Exxaro coal business and the second being the equity account investments. What we did was we looked at the full year 21 earnings on a coal basis and we applied a bare bull base case scenario, applying the EV/EBITDA based, and you'll see there are in the EIA I have defined those as ratios applied. Nonetheless, we have weighted more towards the base case scenario just due to the current risks. We feel that the base case is probably more reflective of the current valuation with the equal weighting towards bare and bull. The implied intrinsic value per share for the coal business is roughly 111 Rand. Valuing the equity account investment separately, we looked at the balance sheet carrying value and applied the price to asset value that of Kumba Iron Ore, which is the closest local peer. The intrinsic value calculated based on a holding company discount of 35.5%, which is the average of Remgro and Rainnet at present. And at the current shares implies an intrinsic value per share of 68 Rand and 6 cents. The combined value equates to the 179 Rand, which implies there's about an 8% upside on the share price based on the 28th of October. So just in closing, this is my final slide. Exxaro is a great company. They have done quite well to strengthen the balance sheet and it's quite sound. They have great exposure to income and associates, and the associates are quite well grounded and strong. They have seen a lot of benefit in the opening trades or re-entry trades following COVID lockdown, and particularly given iron ore prices, which has ran significantly strong. They really benefit from that. They are well grounded and diversified. Transnet, however, remains a massive hindrance to this group, and it really is going to hinder their ability to take advantage of the export market where the proper realized higher prices for the RB1 grades can be achieved. We have seen falling iron ore prices since the release of these results. They're down to, as I mentioned, roughly about $90 per tonne. So thus the contribution from Sishen Iron Ore earnings will dwindle. Coal remains paramount to the energy creation of South Africa. Thus we will continue to see support for their commodity, as well as probably a bit more support for the underlying share price and prices of coal for that matter. The group did declare a great dividend, and the pass-through or the pass-through of the Sishen Iron Ore earnings at 6.8 billion is fantastic for existing shareholders. This is one of those companies that you would have wanted to have been in. It might not be the best company to be in right now. Nonetheless, based on all of our calculations, we see intrinsic value of about 179 Rand 79 cents, which at this point in time implied about 8% upside. Should you wish to place a trade, please speak to either a financial advisor or the trading desk will be more than happy to assist. Please take note of the disclaimer and have a great day further.